Funds, when you think of them, what do you think of? Preppy guys, pinstripe suits, rich people stuff? What are they? How do they work? Can you use them to invest in stocks and shares? Stick around, I'll be going through this in more detail and giving you some simple actionable tips on how to get started. Hi guys, it's Warren Gosling here, back again with some simple actionable financial literacy tips. You know what to do by now. If you find today's video useful, like it, share it, subscribe. You can also hit me up on Instagram, I'm at Warren Gosling. So this is a follow-on from last week's episode, which was an intro into investing. It was a great episode, if I do say so myself. So I'd highly recommend watching that one before you come and watch this one, because it gives you an overview of the fundamentals of investing 101. What a share is, how shares work, and why you might want to partake in them. So first of all, let's start right at the very beginning. What is a fund? So I was watching a nature documentary the other day, and it was set in a rainforest somewhere. I want to say it was the Amazon, some forest in South America. And in that documentary, I love documentaries by the way, they asked, what is the most fearsome creature in the forest? And I was like, tiger, or some big ass 20-foot jungle snake that eats tigers whole, something like that. So anyway, they get to the top 3, and by this time they've already done the tiger, they've done the boa constrictor, don't worry, I'm going somewhere with this, and they get to number 1, and the animal is ants.
Drake!
And the reason they gave ants was that they said collectively the ant colony is by far the strongest creature in the jungle, because they act as one. They can literally strip whole sections of the forest, including any other animal standing in their way, bare. There's nothing that can stand in their way or match them. So a fund, a lot like a formidable, badass ant colony, is a collective investment vehicle where a group of people and or companies pool their money together to achieve a collective investment goal. This provides a much larger sum of money to play with. Most of us only have a new order of hundreds or thousands, if you're lucky, to invest with. But by coming together, we can be talking millions or even billions of pounds or dollars. And if you've ever watched Power Rangers back in the day, individually, the Zords would always get their ass kicked by the baddie. But when they all came together, you knew what time it was. So what I'm saying is a fund is a lot like a Megazord, guys. I mean, financial advisors would be turning over in their graves right now by me using a Power Rangers metaphor to describe funds and investing. But my goal is to make it simple and actionable, guys, so I don't care. Everybody's watched Power Rangers, right? So there you go. And funds are good for 4 key reasons, guys. The first is buying power. Having more money gives you more options and more power. So for example, £100 worth of shares in a company gives you a lot less control and influence than say 100 million. Secondly is diversification, which in simple terms is having different kinds of investment, which in turn reduces your risk. So for example, if I have a portfolio of £100 million and it's only in airline stocks, if say a global pandemic happens to hit the globe and prevents people from getting up and leaving their house and flying from one country to another, I'm screwed. However, if I have investments not just in airlines but also pharmaceutical companies, tech companies like say Zoom, all of a sudden when that pandemic hits, I'm shielded from the impacts of my struggling investments in the airline stocks because I've got others that are performing. And that's a key benefit of diversification, guys. It shields you from risk and loss. You also get what is called reduced barriers to entry. What that means is some investments require a minimum amount to participate. Say that amount is say 100k. On your own, that will be hard to do, but collectively via a fund, remember we said that collectively more money, those barriers melt away. Lastly are reduced costs of investing. Higher volume leads to economies of scale, which means that the average cost of an investment falls when you're in a pooled fund, guys. So now that we know what a fund is, let's look at how a fund works. So a fund ultimately owns the actual shares, bonds, commodities, whatever the assets are that the fund specializes in, they own that. When you invest in a fund, you're buying shares in the fund, not the assets. Now the price of each share in the fund, generally speaking, reflects the price of the underlying assets that it's invested in. So for example, let's take a fund which is investing in say Google and Amazon stocks, and let's call that fund A. And then let's take fund B, and that's invested in say Starbucks and Costa Coffee stocks. I'd expect the funds of Fund A investing in Google and Amazon to be more expensive than Fund B. Why? Because the shares of Amazon and Google are much higher than the share price of Costa and Starbucks. Does that make sense? You also have different types of funds, guys. The main ones are unit trusts and open-ended investment companies. Try and say that fast. As their name suggests, one is a trust and the other is a company. And in practice, guys, the differences between them are negligible. There's not much difference. And I'll be making another video on trusts in the near future, so look out for that one. But what you really need to know is that these are what we call open-ended funds, meaning that the fund can create or withdraw funds at any time. What does that mean for you and I in practice? Well, we just heard that when we invest in shares via a fund, we buy shares in the fund itself. So when a new investor wants to invest in a fund, the fund creates more shares in the fund. And when an existing investor wants to take their money out, they want to cash out, say they want to go on holiday, retire, etc., their shares are either sold to somebody else or they're destroyed. If you're new to investing and just starting out, it's a good idea to start with an open-ended multi-asset fund, which is a fund that is well diversified, we just talked about that, and generates steady returns and is very much low effort. If you want me to make a video on how to choose a fund, let me know in the comment section below and I'll make a video on that. So this is how I started my investing journey, with an open-ended multi-asset fund that was well diversified and very low effort. And I progressed onto more niche funds once I became more knowledgeable and experienced with how the whole process works. Which leads me on to my final point about funds, which is that you also have funds which specialize in different types of investment. There's so much variation out there, guys. They're like Pokemon. There's one for everyone. If you want to invest in, say, tech companies and you like tech, there's a fund for that. If you like tech, but you want to specifically invest in tech funds in, say, Asia, there's a fund for that. If you like to invest in, say, tobacco, alcohol, gaming, weapons, and defense manufacturers, there's literally a fund for that. It used to be called the Vice Fund. I think it has a new name now. But the list is endless, guys. Whatever you're into, there is a fund for that. And lastly, a very important aspect of funds that you want to look out for, guys, is costs. You want to keep your costs to a minimum so that they don't cancel out your performance profits. Firstly, you want to look out for the ongoing charges figure, guys. This should include all costs associated with the fund, so the fund manager charge, etc. And you want to keep this ideally below 1%, because on top of that, there'll also be an annual platform charge if you're investing using one, which I hope you are. I'll also be making a video on how to choose a platform, guys, so look out for that. And you want to keep both of these costs combined under 2% per annum. So now you know what a fund is, how they work, and their benefits. I said I was going to keep it very simple today, guys, so hopefully that's demystified them for you. If you have any questions or want to show your appreciation, guys, drop me a comment below. Not only does it let me know that I'm actually doing a good job, but it also really helps these videos get out there to others who are on the same journey and want to get started like you and I. Lastly, please like, subscribe, and share, and I'll see you guys next week.